Retirement planning isn't just about saving, it's about taxes too. Today, Casey Elkins and Mark Stimson from Elevated Financial Management share answers to common questions and key strategies to help you keep more of your money, something we all want. Welcome back, y'all. Mark, why are taxes such an important part of retirement planning?
You know, there's an old saying in the financial services world that it's not how much you have, but how much you keep. And that's why we believe tax planning is so critical. We have a CPA in our office, and we want to look ahead. We want our planning to be looking through the windshield. There's a lot of great CPAs in our area. We have one in our office, but so many CPAs, we give them the numbers. They're really looking through the rear view mirror, right? They are preparing taxes based on numbers we've given them. We want to help mitigate taxes for our clients, and that's why tax planning in our office is so critical, because we're going to help our clients keep more money. That's
definitely. And Casey, I want to get to you. We all want to pay less in taxes. How do we actually do that?
You know, that's a great question. It really depends on your individual circumstance, right? Because there is a lot of individuality to your own finances and how to make adjustments. So Roth conversion is something that's talked about a lot, especially for people that are approaching retirement or maybe early in retirement. But it's not always the right fit. It doesn't actually make sense for everybody, right? Oh. It is an individual thing. So there's different ways that you can plan, and it really depends on your other income sources, where your investments are at. And that's something that, you know, it really has to be something that you have a specific conversation about for your individual circumstance to make sure that you're getting custom tailored advice to help you save on taxes just in your individual circumstance.
Before you go to that next question, Kelly, I think it's important too, because there's some strategies known as tax loss harvesting that can be done inside your investment plan with your firm. And if you're not getting that type of advice, tax loss harvesting can really cut down on taxes as well. So, but it's very specific. It's based on your situation, but it's something that we want the viewers to know that if you're nobody ever talks to you about that, you should maybe be talking with someone that can talk about tax loss harvesting.
It makes sense. And I want to stay with you. If someone was in a few years of retirement, do they still have time to do anything? Or is it just too late?
Yeah, it's never too late, what we would say. A lot of water's gone under the bridge, right? But there's still water behind the bridge. So again, tax planning is something we do with every client, whether they're 60, 70, 50, it doesn't matter. There's always things that can be done. Casey mentioned, you know, Roth conversions. That doesn't always make sense. Right now, it's a buzzword. Everybody's thinking, oh, I should be doing a Roth conversion. That may not be the case. So you need to be working with someone that can really analyze your personal situation and make sure you're making a good choice when it comes to whatever tax planning you want to do.
You know, I'll say, too, that even if you're already retired, it's still not too late to do tax planning, right?
Oh, good.
It is something that when we think about that for the long term, we want to have as much runway as possible, right? So it's better to do it 10 years before you retire, but that doesn't mean it's too late if you retired 10 years ago, because there are strategies that can still be used. But again, it requires a conversation to figure it out.
Is there a sweet point in age or a point in life then? Is it the 10 years before you retire? That's the sweet point?
You know, that's a great question. I'll say, like I said, it's never too late. It's never too early either. So if you're young and you're making good money and you're saving well for retirement, are you saving in the right type of retirement account? Because there's different accounts and they're taxed different ways. And depending on your income level, there's different options for you. So it's really never too early. If you're 30, 35, if you're 50, 55, 60, whatever it is, it still can be beneficial to have that conversation.
And what are some common myths too, y'all, about just taxes and retirement?
I think kind of based on what Casey just said, some people are putting this off too long, right? They're not working with somebody early enough in their, you know, trek toward retirement, right? The earlier you begin, the more things that you can do. It's kind of like Roth conversion. Some people wait till November each year or December and they want to get all this planning done. We don't have time. So the earlier you start in the year or in the decade before you retire, you're always going to be more successful in what strategy can be used to help mitigate these type of taxes, because there are a lot of myths out there, you know, that we want to dispel. And you've got to be working with someone that understands taxes. And taxes, for a lot of the big box stores, they don't touch taxes. They'll tell you, if you ask them a tax question, they're going to say, go talk to your CPA, right? And we don't do that in our office. It's a big part of what every plan that we put together.
Definitely. Where can people find you quick before we go?
Yeah, great question. So for folks watching at home, there's a QR code. They can read about the book or actually sign up to get a copy of the book. And that's the best place to learn about tax strategies in retirement, income planning, all the things that we discuss. And then, of course, always our website as well.
Amazing. Thank you so much, gentlemen.
New Day Northwest is sponsored by Elevated Financial Management.